Welcome everyone. In this video, will the XCN coin rally continue? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. In the previous video, we closely analyzed the chart and emphasized the importance of the 0.382 Fibonacci retracement level, a key technical area that continues to play a significant role in current price action. This level is one of the most commonly referenced zones in technical analysis and is widely respected by market participants. As we mentioned before, levels like this often act as initial barriers where price struggles to break through on the first attempt. These zones are where the market essentially takes a pause to reassess and attempt to define its short-term direction. In fact, we specifically pointed out in that video that price may not break through this level on the first try. And now, we're seeing that exact scenario unfold. As predicted, price encountered resistance right at this level and has since pulled back slightly. It's important to highlight that while such pullbacks can trigger panic among some investors, from a technical standpoint, this is actually a very normal and even healthy development. In financial markets, price never moves in a straight line. Every rally includes minor dips, and every decline has temporary bounces. These fluctuations are crucial for the sustainability of any trend. In particular, pauses or minor pullbacks around Fibonacci levels often set the stage for more decisive breakouts later on. When the market takes a breather at such critical levels, it provides both technical and psychological grounding. Looking more closely at the current pullback, we can actually interpret it as a potential precursor to a larger move. When price hits a strong resistance level but fails to break through on the first attempt, it often retreats slightly to gather momentum. During this correction phase, new buyers may enter the market at more attractive levels. Volume tends to increase, and this creates the setup for a more powerful breakout on the next attempt. That may be exactly what we're witnessing right now. Price tested the 0.382 level, pulled back, and could be preparing for the next leg up. One of the most important factors to watch during these scenarios is whether price forms a higher low compared to the previous bottom. If it does, that's seen as a very bullish signal in technical analysis. It suggests there's still strong buying pressure in the market, that traders are viewing dips as opportunities, and that the broader uptrend is intact. On the other hand, if price dips below the previous low, it could be a sign that the trend is weakening or pausing temporarily. It's also worth noting that the 0.382 Fibonacci level isn't just a technical resistance. It also acts as a psychological boundary. These are zones where many traders are waiting to either enter or exit positions, so the price action here often reflects the emotional state of the market. When price fails to break above this level, some traders take profits, while others open new short positions. However, this doesn't necessarily change the long-term trend. In fact, price consolidating and building strength around this level before breaking out with higher volume can lead to a much healthier and more sustainable rally. In conclusion, the short-term pullback we're seeing from the 0.382 Fibonacci level doesn't break the bigger picture. In fact, it could actually support the strength of the long-term trend. It's natural for price to rest at key levels, reassess direction, and then continue its movement with more conviction. If this pullback results in a higher low and buyers step back in, then another test of the 0.382 level is very likely, and this time, a more decisive breakout could follow. Of course, as always, we need to consider other metrics alongside this to ensure a complete and clear analysis. Stay tuned. When we take a broader, more macro-level look at the chart, we can see that price action has started to form a very recognizable structure, one that is widely followed and considered highly significant in technical analysis: the cup and handle pattern. This formation is known for signaling strong bullish potential, especially after a prolonged period of accumulation. At this stage, the cup portion of the pattern appears to be nearly complete. Following a significant decline in the past, the price spent a long time consolidating at lower levels before gradually recovering with a steady and controlled uptrend, forming the classic U-shaped curve that characterizes the cup pattern. These types of formations typically indicate a market that has transitioned from a downtrend into a recovery phase, and they reflect a gradual shift in investor sentiment from negative to positive. However, for a cup and handle pattern to be fully validated, the U-shaped base alone isn't enough. The pattern also requires the formation of a handle. The handle typically represents a short-term pullback, or consolidation, a phase where traders may take profits after reaching the cup's resistance zone. This pullback is a natural part of the pattern and often lays the groundwork for the next upward move. During this time, price consolidates, new buyers enter the market, and momentum begins to build for a potential breakout above resistance. Looking at the current price behavior, we appear to be in the early stages of this handle formation. Price has reached the previous high, the top of the cup, and has met some resistance, leading to a modest pullback. It's important to emphasize that this pullback is not a cause for concern, but rather a necessary and healthy development from a technical standpoint. The handle usually forms within a narrow range, moving sideways or slightly downward. During this phase, it's also normal to see a decline in trading volume. In fact, lower volume during the handle followed by a sharp increase at the breakout is a classic sign that the pattern is functioning properly. To complete the pattern, price needs to finish forming the handle and then break out above the resistance level that corresponds to the cup's peak, ideally with strong volume. This breakout is what's referred to in technical analysis as a confirmed breakout. Once it occurs, the price is expected to move toward the pattern's projected target. That target is calculated by measuring the depth of the cup from the bottom to the top and projecting that distance upward from the breakout point. If this scenario plays out and price breaks to the upside, it would be a highly bullish signal for investors. Cup and handle formations are often seen as reliable indicators of a developing bull market. This is especially impactful in assets that have been under prolonged pressure or in a consolidation phase. Completing such a structure can significantly boost investor confidence and bring fresh buying momentum into the market. In conclusion, what we currently have on the chart is a structurally strong and highly promising technical formation. The cup portion has largely been completed, and we are now within the handle phase. If this phase continues to develop in a healthy manner and leads to a successful breakout, it's very likely that price could reach the technical target derived from the pattern. As the price action approaches the 0.786 Fibonacci retracement level, the target of the formation, this isn't just about reaching a technical milestone. It also marks a critical psychological and structural turning point in terms of market dynamics and investor sentiment. The significance of this level comes not only from the fact that price has historically stalled and pulled back around here, but also from the strong confluence of Fibonacci retracement tools and other technical indicators that reinforce its role as a key resistance zone. In other words, price reaching this level, and potentially consolidating around it, represents a major decision point for many market participants. The importance of the 0.786 level lies in the fact that it's closely monitored by both retail traders and algorithmic systems. Many traders tend to view this level as a resistance zone and may begin to take profits or even enter short positions as price nears it. As a result, this area often triggers profit-taking across the broader market. That selling pressure can lead to minor corrections, pullbacks, or increased volatility, all of which are part of a healthy market structure. These pullbacks, however, don't usually signal panic. On the contrary, they're often viewed as necessary and healthy pauses in the market. Moments where price needs to cool off, reset, and build the momentum needed to continue its upward trajectory. Many investors view these retracements as buying opportunities, allowing price to regroup at more attractive levels before another potential breakout. So, when the 0.786 Fibonacci level acts as resistance, it often results in increased volatility. And that creates opportunities for traders looking to position themselves for the next move. Looking ahead, a breakout above the 0.786 level could signal a very strong bullish continuation. If price manages to break through this resistance with conviction, it could trigger significant momentum and buying pressure. Investors will be watching closely to see if the breakout is sustainable, whether price can hold above this level, and if new highs can be formed. If price establishes support above the 0.786 level, it opens the door for the pattern's target to extend significantly higher, introducing the potential for a much larger move. This kind of breakout would likely increase optimism among market participants and potentially kick off a strong upward rally. On the flip side, if price struggles at this level and pulls back, that would also be a technically natural development. Every rally encounters resistance at some point, and these resistance levels offer the market a chance to pause, consolidate, and reattempt a breakout in a more sustainable fashion. In that case, a pullback from the 0.786 level could lead to the formation of a higher low, creating another buying opportunity before resuming the upward trend. Once the price completes this pattern target, we'll take a deeper look in a more detailed video breakdown. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.